Good afternoon, all. This is Barry Hemsey. It's about 6:05 p.m. on February 2nd, 2023. It's a Thursday. My apologies for not doing a webinar yesterday, as we always shoot for on Wednesdays. And by the way, we always post it here. Guess what? That day was wrong too. I forgot to change it. My apologies again. I didn't have a good day because the night before I hardly slept with Tico, my dog, getting very, very sick. He's got GI issues, and I barbecued for him. He had too much to eat, and from like 2 in the morning to like 4:30, it was a mess, and I just too much. But anyhow, plus it was FOMC, so I slept in the morning a little bit, and then hit the FOMC really well. It was good. I got a little bit lucky too, come to think of it. Today was a different story. I made an early mistake, and last night I slept very well. I actually went to bed early. But I made an early mistake. I let it grow. And then midday I came back. I was okay. And then I made another little mistake, which was a smaller loss, of trading the earnings. You can't trade futures with earnings. It's at the and there were a couple of spots that I really had good gains, and it evaporates in front of you instantly. So I promised myself not to touch it during earnings, but oh well. I was ahead really good, gave some back. You know, it hurts the most when you have something and you give it up. So, but remember, as I posted on Twitter this afternoon, or this early, probably for this webinar, actually, what I always say in the chat rooms: 1 hour, 1 day, 1 week doesn't make you, doesn't break you. Don't get cocky because you had a good day and you hit it big time, or don't lose. On the other hand, don't lose your self-confidence because you had a bad day. Say, if the market humbled you, okay, that's a polite way of saying you had a bad day or a bad week. What happens is, at the end of the day, remember there's also tomorrow, and you got to be prepped for it, mentally and chart-wise. So both are key. All right. Quick housekeeping stuff. We got stopped out of PMT. I'm going to go over that. Actually, the last 2 days have been very, very strong market-wise. And every selling that we get, it comes back. Buyers are there, it comes back with a roar. So we're going to switch our call on that market. Now, of course, we're down a little bit now, heavy on the Apple. I'll probably do that over the weekend. I'll sit through the pullback tomorrow. Both Amazon and Apple were pushed. We're going to discuss that to levels that was too perfect for the earnings, and so this should not be a surprise. Of course, Apple missed big time. So, aside from that, okay. ORB development continues on the 5.0. We should have a working model shortly. Not ready for prime time, but it's a multi-asset one. 5.1 will be multi-asset. So we'll trade ES also and the crude. Right now, we're really slating for 3, more than 2, of course, and not 4 yet, because that will involve some software issues here. I mean, computer issues, actually, not software. But I'm prepared to go there, but I'm actually looking around for a better computer to get. I learned a lesson from my problem with my i9. But I got to think through that. You know, you can't make quick decisions. You have to look at all ramifications. And that's what we're looking at. Actually surprised that certain brand new i9s, brand new ones, are fairly inexpensive now, where they couldn't get parts and they couldn't have issue, they couldn't get repairs. Let's say last summer, now it's a different story. So I highly recommend you guys think about i9 if you think you're going to have a rigorous environment. Average guy for our systems holding his i7. Okay, and we've consulted with you. Those who request for help, we have gone to Amazon and given suggestions. We're not involved with Amazon. We'll give you those suggestions both for monitor, computer, and plus UPS. Probably the most important thing, you need a UPS. If you come in for, let's say, a free trial, we send you a questionnaire to fill in, okay? And you'll notice, I'm sorry, it's on the landing page. Let me go there. On the landing page, we'll give you a questionnaire to fill in. We're not trying to get into your privacy. What we're trying to do is, where's the pen? Hold on. Okay, where is this? Huh? Okay, no, I'm wrong. Oh, I see. I'm on the wrong page. This is for the one that you're running. Yeah. Here, what we do on the auto. If you request the auto, we'll send you a questionnaire to fill in your history for two reasons. One, this is what I usually look at. Do you have UPS or not? That tells a lot about you. Is it, and also, of course, how experienced you are with a trade station and how many years you've traded. This system is not for everybody. And when we get to the multi-asset, probably going to be for less people. Not in terms of capacity, but in terms of ability to operate it successfully without a headache. Okay. We have posted the results for 4.88. Of course, we have a website also that actually, not just for the back test. What's going on here? We also, hold on. Oh, we got locked here. It also shows you the, there we go, sorry. If you go here, yeah, it shows you the back test. We also share with you the actual, with one of the actual owner, account owners keeps. So I'm out of it. For transparency reason, I want to be out of it. Yeah, I'm a developer. We have a system. The system trades in Chicago. They report it. The money they handle, PlayStation does, and this gentleman, Marshall Free, he posts the results. So all I do is just keep an eye on the Excel sheet, which we'll share with you. Now, before we get to PMT, I want to introduce our special guest today. As we discussed a couple of times ago, and he came, I think, to one of them very preliminary. We're waiting some more artwork to be finished. Hi, Greg. Hi, Mr. Murphy. And let's see. Anybody else I didn't do that? And my market was up. I've known Mark for a long time. Actually, he probably was very instrumental in my progress by urging me to leave LA and come to Chicago and add to my theoretical and minimal practical trading experience by being available in Chicago. Handle SIBO from there because I was a second guest faculty right after the great Larry McMillan, the high priest of our business. He has sold more books than anybody else in option space. And I was out of Chicago. As a matter of fact, when Larry, myself, and the Feisty did the three gurus, I was a point man with SIBO. Learned a lot from Mark. And then later on, we start working together in different capacities. There's a little write-up on it. You'll see very impressive background and many years of combat environment in the trenches, both at SIBO and also One Chicago, which was a single stock futures. And that's actually where I got to meet him because I was one of the guys who was looking at One Chicago, and a couple of brokerage houses were asking me to participate. And of course, back then it was really early stages. In one of those meetings, I met Mark, and I knew, hey, I'm going to learn a lot from him. And my attitude always has been, surround yourself with people better than yourself. Don't be intimidated by them. Learn from them. That's important. Anyhow, in his new venture now, he because there was an opening available at Larry McMillan's shop, he's becoming their head option mentor. As you could see here, there's a little write up there earlier that Stan pulled back, and I think Mark will do a marked difference in the offering there, given his background. Anyhow, this is what we're showing. Then of course, you land on this page and you fill in the question as you go forward. You'll see what the program entails and so forth. It's not cheap, but I think it's value. There's value. And so let me pass on this to Mark. And also, if you have questions, please give us some questions, some stocks you wanted to analyze. We're prepared to show some charts here, and Mark will do the analysis, and we go forward. So without further ado, let me bring Mark in, and we'll show my charts, my page. So the recording is easy, and then but he'll have the mic. And go ahead, Mark, introduce yourself, and we'll take the first question when it's ready.
All right, excellent. Once again, I want to thank Februay. Obviously, we've become very close friends. And as I have helped him with options, he has taught me the world of futures. I had no futures background until the last 8-9 years dealing with Februay and all his wonderful technology. And he's been very humble in telling everybody what I've done for him. But he's done equally as much for me on the future side, which has created a very, very strong relationship between the two of us. And recently, I was doing things at the fund I was trading with that you could see there in my little bio. The fund closed down. COVID put a real damper on all the biotechs, and the owner of the fund decided to just close things down as is and concentrate on what he does well with my partner, Ralph Katz, and that's play bridge. They have the best, maybe the number 1 or 2 bridge teams in the world that my friend Ralph is on, and obviously the fund backer of the biotech fund, that Corey that you see there in the second paragraph at the bottom, that's was his fund that he put up the money for, and he decided let's close it down so I could concentrate more on bridge. He's a little older and he wants to enjoy it, so that was what happened there. That happened in March of 2022. So I once again needed to reinvent the wheel for myself, doing things. I have 3 young kids, so I think I'm going to be working till they put me 6 feet under. But yeah. I enjoy my children immensely, so that's not a problem. I've got a lot of energy, and I love helping people do different things. And when I talked to my friends at the SIBO, they said, why don't you check with Larry McMillan? He's got a mentor that's retiring, and perhaps you might be a good fit there. And he interviewed about 35 people, and everybody sent in their resume, and then they had a few questions that they asked everybody, and as it worked out, I was the only guy that seemed to have the right answers to a couple questions that no one else could. So they thought I was a good fit. So I said, okay, I'm willing to do this on a part-time basis, which I'm doing. I really enjoy it. I mean, I taught at the Options Institute at the SIBO. I obviously taught 20 clerks of mine to become market makers and traders on the CBOE floor. So teaching was always a second life to me when it comes to options and stocks and managing risk. So they made me the options mentor, and I started middle October, and we're starting to pick up some traction with getting students to get the business going again, because they stopped the business right at COVID, and that's when Stan Freefeld decided that he wanted to retire. So that's when they started looking for someone, and that's how we got together. And Larry, as you know, he needs no no explanation to what he's provided for the options industry. I mean, he's an amazing individual. His books are amazing. What he's offered is amazing, and he's built a beautiful platform for tools that you can subscribe from his website, from him, for trading, and they also manage money. And now they have me doing the options mentoring program, and my style of mentoring is a little bit different than Stan, because basically Stan's method is he teaches people from the newbies with no option experience all the way to however complex they want to get, where what I'm experiencing with people that are interested, I'm running into a lot of individuals that are former hedge fund traders that are going to manage their own money. People with a lot of capital that want to trade for themselves, do not want to have their money managed. So I'm running into people that are very experienced in the option world, where they've been trading for 6 to 15 years. And what they're getting from me or asking from me is to give them another way to reinvent their wheel of how to trade options. And they see my resume and they see my history of all the events I traded. And that's something that makes them very interested, because obviously with that kind of background, I've kind of seen everything as far as an event that's happened in the financial markets. And obviously I've always been trading options during those events. So that experience is helping me extend out to these people. And the beauty of it is this. A lot of the students I have now, and I just started gaining traction, I've got up to 6 students. Fari indicated that it is expensive. I've got people that are doing a 12-session course, which is 12 45-minute sessions. But as you can tell, I like to talk, so things always end up to be an hour or so. And basically what I'm doing is asking them to tell me what they want from me and how I can help them. And we customize the 12 sessions that they want to create of how they want to deal with current strategies they're dealing with, how to make them better, or how to do similar correlated strategies to that, how to make money in a different manner, and then how to manage the risks. So it's really been exciting for me because it allows me to go outside the box of an A to Z mentoring program of teaching what a call and a put is to help these individuals which are trying to make a transition in a changing marketplace. As you all know, the marketplace evolves rather quickly. Trading has changed immensely from open outcry in the pit, people handling paper and so forth, to billions of dollars in automation and technology and trading. So the systems and the people that use are mostly retail systems or sophisticated like Interactive Broker, along with the Trade Station and all the other bells and whistle platforms that people offer. But the bottom line is they want to look for new ways so they can manage their own money and come up with some ideas that I can explain to them, show them, and break down how does it make money, what is the risk, and this is what I have an interest in doing. And it becomes interesting because, like I said, it's not an agency, what is it called, or put. It gets into very complex strategies, and everyone I've worked with so far, they love the different ideas I give them and doing another way of what they've been doing that hasn't been working for them. And now when I show them the ways that we're recreating the wheel, it's working for them and they like what we're doing and they're asking the right questions, they're getting good answers. So basically, I'm going in a different direction with people because I'm kind of crafting and customize the path they want to go. And they've been doing what we do is 12 sessions. You got a 12-session beginner group or a 12-session more intermediate and advanced. And those 12 sessions are like $5,000 for the 12 45-minute sessions that extend obviously an hour or more. With those sessions, you get a lot of the subscriptions that are in the Macmillan website. So you get a lot of collateral information that you have access to that they believe is worth $4,000 in itself. And you get newsletters, you get calculators, you get a lot of information that if you were to click on the bottom part of those superb programs to choose from, level 1 and 2 are those 12 sessions for $5,000 a piece. The top one, 24 session, is the biggie. That's $9,000. And I haven't had anybody that wants to go from A to Z with the big one. They're very interested in how I present the 12-session program 1 or 2. They like what they get for collateral materials that go along with it. And that, I think, is what's driving the new type of business that's coming to me as the option mentor. That first page that Fari brought up has got the link there. When you fill that out, basically it's got my email there. And at the same time, you'll see my bio. And when that gets sent to Macmillan, they see it's coming from people that have clicked onto my landing page, so to say, with the link and filling out the email that's there, which has got my name on it, Mark Esposito at optionstrategist.com. So it's really exciting. I like what I'm doing with them. And as I said before in my former introduction, I like teaching people, I like helping people, and I like people coming to me with their ideas, which maybe I never used, but now I know how to take those ideas and make it better. And that's the fun part. And managing risk for them, which is important. And, they're looking for ways to make money. And these people, a lot of times they've got some big capital accounts of money that they have at their disposal, and they want to take advantage of it. And some of them I've already synced up with Fari for the futures. They like the algo, they like what that brings to the table, so they're also interested in that. So there's a lot of synergy that goes on between what I'm doing with option strategists and obviously what Februay does on the future side, which is a tremendous algo and the tremendous streamers and OTF. Part of those platforms I helped be involved in and watch them evolve to the level they're at now. And obviously, we all know how intelligent and great Februay is, and you can tell by how much effort he puts into this. And he's got himself and Captain Tico, and they're always working their butt off. And the result always shows, and it's fun. It's fun when things go good. It's difficult when things go bad, but that's why you try and have a 80-20, things go good versus bad.
Right.
And that's what I'm trying to do here with people, is trying to take the probability of succeeding, which, as we all know, my daughter could be 50-50 by being long or short. I try and take that percentage to 80-20, 80% where we control our probability for profit versus 20% that we can't control. So I'm excited, starting to gain traction. And it's revitalizing my interest in options again, which I have been away from for like 6 to 8 years, other than some overviews and comments that I'll pass on to Februay and some of his great people that are handling his options platform now, something I did way back in the day. And it's fun. It's absolutely fun. And, you know, I like when you can, obviously the last paragraph there, Mark's mission is to understand his students, their goals, design a program that best suits each individual, and develop that strong acumen to give his students a high probability to succeed in their trading endeavors. That's my mission goal. And so far, every student that I've completed the 12 sessions with that have taken the 12 sessions, they definitely are on that path. And I've got 1 or 2 of them want to come back and do another 12 because they have some more strategies they want me to spend time with them to explain and give them alternative ideas and how do they manage the risk. So basically, that's what I'm doing now. It's exciting. It is a little costly, but you know, once again, what you learn and what you have is available collateral that you receive from the Macmillan website that you get along with taking each of these programs or both is well worth it. He's very active in giving newsletters. He's very active in giving updates, and all his information is relative to options. The only thing that he has that's close to futures is the VIX, and he's involved in that as well. And they do a great job at Macmillan. It's got great people that are intuitive and learned in what they're doing, and I think it's definitely well worth it. And you know, I would be happy to help anybody accomplish my mission goal that's in that last paragraph that Februay has highlighted in blue. And that's about a strong, fast overview of what's going on with me, what I'm doing, where I'm doing it, and where it's available.
I will be sending the link in the email out later on today, guys, so you can just link on it to land here and then decide what you want to do. But before we wrap this section up, how about a couple of questions for Mark? Do you guys have any trades that you want him to analyze, or any particular name that you'd be interested to look at? I have a couple of questions, but I'll wait for you guys to give us. You can post it in the chat there. It's called. It's under the down below. You have a section that you can type it in, or you can open your mic and say that. What name do you want us to take a look at? But what we'll continue to do with Mark is every once a month we're going to do a little option corner with him, so you guys can bring your questions in for that. And of course, no more introduction on this because you already would know by now what's going on with him. So we get to the questions, to meet up the questions quickly. But if you have a trade, let us know. Otherwise, I'm going to ask him to give us a little review on the earnings today. Okay, the 2 names I'm interested, Mark, for you to look at, as I discussed earlier with you, Apple and Amazon. Obviously, I don't care about Starbucks. We knew that was coming in China. But Apple and Amazon post-earning. So if somebody wants to get into it tomorrow, what should they do? Is that okay with you, Mark?
Yeah, because I could explain, you know, I have a couple students that have, you know, already have strong interest in the Fangen names or the high flyers, as we know, price-wise. What to do when you have these earnings announcement that comes out, and I think as everybody knows that's involved in your webinars and when you do PMT and when you do your, you know, you used to do your lotto ticket trades,
yes.
That there's opportunity. And,
yes.
you know, a lot of the students that I have, it's been a both educational and one of the kind of understanding that they see there's a different way to look at things because people don't really understand how the volatility spikes can be taken advantage of, and also how the volatility spikes, meaning the volatility goes up substantially, can be a mind trap. You could be stepping onto a mine and not realize it. And what's been interesting with the students is that I'm showing them how to make an analysis, okay? So in today's environment, volatility is basically the key to pricing. Volatility is the key to trading, other than if you're directionally got any insight from your charts, from the streamers that Februay builds and shows you. Volatility is the key. So what is volatility? Obviously, we know it's the movement and the relationship. What is delta? The movement of the option to the stock, the percentage of that movement of the option to the stock movement. And then when you get deeper into the Greeks, you have Greeks of the options, which are the gamma, which obviously is going to give you the change of that delta. And obviously long gamma, the change is going to react in a positive way. Short gamma, it's going to react in a negative way. And then when you look at what is the gamma, you look at its vega. What is vega? Vega is the cost, which is theta. And if you don't have a sound, strong understanding of the Greeks, rho is also another component of options, and obviously rates are near 5%, so it probably has more of an impact than it has in the last, I'll say, 10 years. Exactly. But it's still very small. It's called rho, R-H-O. And that has very little impact on the pricing because interest rates just aren't at 10 or 20% to really affect the pricing. But when you look at the Greeks, and you look at an option, and then you look at its delta, then you look at its gamma, and then you look at its vega, and you look at its theta, you start to understand why it's so relevant in names like an Apple, in names like an Amazon. So you're going to see vol spike the day before earnings, and depending upon how close that earnings is to an expiry, you're going to say, wow, look at the vol. The expiry is going to be next Friday, or it may even be tomorrow. Because we have weeklies, we have dailies, and the vol, and they look and says, wow, the vol's got to be like a 95 or 105. Why can't I just sell that and buy like next week or the monthly? That's probably only about an 80. I got to make money on something like that. Well, people don't understand that, if you don't really look at the true picture, okay, what is the true picture? This is one of the lessons I teach inside of the mentoring program. The important part of options, since vol is so key, you need to know what is the current vol today, okay? What is the actual vol today? And you need something to look back at, which is historical volatility. And if you can create that look, and you can analyze that look, and now you think about, okay, we got earnings coming. We know that when the announcement's going to happen, we're either probably going to get a big move or maybe a sideways move. And the way I price options for vol names that are volatile, that are high flowers, if you look at the money, so I don't know what Apple was before the announcement came out, but you look at the at the money straddle. So what was the at the money straddle before the announcements? Do you know, Februay?
I'm going to bring it up right now. You want the straddle? There we go. Here's your straddle. Remember, this is locked up at 4, so
right.
This was pre-earning.
Yeah. It's perfect for what I'm about to explain.
Right.
So when you take the aggregate price of the straddle, so if the at the money is what price, Februay? 148.
Let me see what the close was. 1 second, though, because the daily price goes 150, almost 151. So we got to look at the straddle for 151.
So look at the straddle.
Yeah, it's looked like it was 960. No, the last was 930.
So 930. So yeah. when you look at 930, 960, let's say 945, right?
945. Divide by.
So what you need to realize is that the people making markets in the options are obviously all the big market making groups, the Citadels, the big hedge funds, the big banks, J.P. Morgan, Chase, Goldman Sachs. They're your option market makers. Okay. Yes, public paper comes in to create a bidder offer once in a while, but the size is dictated and the markets are dictated by the Susquehannas, the Wolverines of the world. So when they're pricing the straddle 930, 965, what are they telling you? They're telling you that they believe that the earnings announcement, the stock's going to probably be within the parameter of $9.50.
Right.
$9.50 up, $9.50 down.
Mark, it was about 6%.
Okay.
Of the price of the 151, right?
So that's how they're making markets based upon that. That's how they're managing their position. And obviously, a lot of times those numbers end up being incorrect and the market moves much bigger. But a lot of times they're right. So when you look at that, that gives you a basis to understanding how they're pricing it as a market maker. And I gotta believe that I'm gonna go along with a lot of their market making markets most of the time. So they're giving you an implied volatility of what that is. Now, if you look at the historical volatility, so that implied volatility looks about 37 and change from what I could see from a distance. And you look at the implied, that's the implied vol. Now, when you look back historically, you go back a week from today, then you go back a month from today and see what is that implied volatility and how much has it increased? Is it nominal? Is it substantial? So now you can start to look at that and think about, okay, if I wanted to do spreads, I've got to understand that vol. Because if the vol isn't spike enough in the month that you're going to sell against the month that you're going to buy or the week that you're going to buy, you're maybe setting yourself up for what? Okay, the vol in the front day or front week is going to obviously collapse very much quickly. But at the same time, that protection you created, which is longer vol because of time, whenever you have time in your vol, that's your theta. That means that you may be paying a lot more for that insurance against the short side that you sold than you need to. And that spread may not work out. You may have paid too much for your protection against the short side that you're going to make. So you need to understand, literally, the vol that's implied, the vol that's been historical, and obviously what you think as a possibility of movement and what that's going to do to the way that the straddle is being priced, which is where the professionals are. And from there, you can create a time spread that looks to be a play for something that's not going to move a lot, or you could buy a time spread for strike way up higher. It's a good way to put on a bullish strategy with not a lot of risk. Or you could take a bearish strategy and put on a time spread for puts that are lower strikes. It's a non-risky event in many ways that's very effective if you've got the right direction on the trade, because obviously as it moves to the strike, right at expiration is when the time spread has its greatest value. And we do a lot of this in trades that we do. I've done a lot of time spreads my whole trading career, and you become familiar. So if you're trading Apple or you're trading Amazon, every time you do this time spread, get your own little notebook out and write down these vols of how they've changed from what it was a week or two or a month before the earnings and what it looks like the day before the earnings, and keep track of that. And what you'll see is you'll create a logbook of what these spreads widen out to, and you'll be able to have a better understanding of, is there more risk there? Is this a good time to buy it? Or maybe it's a good time to sell it. So that's a very good strategy to use in earnings names, any earnings name. It doesn't have to be Apple, it could be any stock. Is you want to familiarize yourself with vol, historical, and obviously what the implied values are, and then obviously you create yourself a little history. So when I traded my stocks in my pit, because I did it every quarter for earnings, you just naturally know what the spread should be. When it gets too high, I sell it. When it got too low, I bought it. And 90% of the time, I made money. That's what happens when you start putting time into this and effort into it, like it's a real job, and it should be, because it's your money you're putting at risk. You want to take a shot, just, there's a lot of other things to do. Just buy a call, buy a put, and if you're right, you make money. If you're wrong, you lose it. But if you want to do it from an intelligent side, you've got to put the work in to create the history of information You've got to understand the Greeks of the options you're dealing with. You've got to understand your name. And like, when Fari and I did this when I was helping him with options, he'd give me his top and bottom of where he thought the stock would go. And then we would create a strategy based upon that.
Yeah.
Because it's not always easy to be 100% correct on where you think it's going.
Yeah. Totally.
And then when he's got, well, I'm not sure, then we find a strategy that fits the I'm not sure number, which a lot of times happens. So it's important for people to recognize what goes into, putting these type of strategies together. And, when you look at Far East streamers, which are in front of you, they're tremendous as far as giving you a feel for where the stock's been and where it's going. Because guess what? That future indication is a lot like helping you with what the future volatility could be. And that's it. It's important knowledge to have as the historical volatility to go along with the implied volatility. I mean, if I had a crystal ball that gave me the future volatility, boy, would that be wonderful? It would almost be like Back to the Future when they had the almanac with all the results of the sports games. That's what it would be like. Good stuff. So did you have any questions here, Fari, regarding that?
Well, what are you thinking for Apple for tomorrow?
So it's gone up. What did it go up overnight?
You're showing the screen right now. Take a look. This actually is down to overnight. It
So
went
it's
up
down.
earlier today. They juiced it up. As you can tell, they actually had it above Apple. If you look at Amazon, they brought it to the 200-day on the daily. Okay.
So where did Apple? After the
both were
close,
slapped.
how low did Apple get from 150?
Here we go. It should show it right here. But 147 now. This part is live. This is
Okay,
the
so
15-minute, but extended
right?
hours. Shows the extended hours.
So it's nominal. So the market makers, did it get above $9 either side at any time?
Oh, I don't know. Hold on. That showed the close, and that was the max. Remember? And I'm sorry, that was the max
we're looking
price.
for 159 or 141. Did it pierce any of those numbers?
It okay. The price underlying was that here's the number it came, so that pushed it up. Here's the daily. It closed at the end of the day. If you look at the daily, it was closed 24 about 38 cents below the high of the day. So it was completely juiced up into the earnings. This is post
Okay.
And obviously came to 15-minute 200 day 200 bar for 15 minutes and bounced up.
So it's trading 147 and change now?
Pardon me?
It's trading 147 and change now?
Right, 147 and a quarter. Yeah, and net for the day, as of the last day, which is the legal day, today's legal day, is 1.37. So we were up ahead quite a bit, gave up some of it back.
So the folks that basically sold vol at the higher levels, they will gain tomorrow. The folks that did a time spread around the 150 or 145, they will make tomorrow. Okay. And vol's going to come right back down. And as the market makers made the market, I told you that they thought they didn't think it could go above 160 or below 149.
Correct.
I mean, 141, not 149. So it looks like their markets were right at spot on to protect themselves. Mm-hmm. And right now, the way you're looking at it, if you go all the way to the left, that seems to be the area it's got to break out to get above.
Yeah. Well, the 2 sigma event on a daily were right below it. But remember, stocks, I'm talking to you guys now, the members here listening to this webinar. The stocks, unlike indices, because indices are averages, and those are law of averages come to play, you can go up to 3 sigma easily. So the 3 sigma puts us at 157. So should you want to play long tomorrow, again, what is sigma? Sigma is standard deviation. Basically, this vol of this stock live in front of you. To get to 3 sigma, that 3 level of vols away, you should not be betting anything above 157 right now.
Right.
especially for short dated paper. If you're going to be trading, let's say, Apple's what? Only Apple's still weekly, right? I don't think you have less of a weekly for Apple. It's the spies and
They added a lot of dailies for the stocks. It might be one of those as well.
really okay. Oh yeah, because it's highly held, yeah, widely held. Yes, for that reason, I wouldn't go and bet something more than next week past this area, 157 area.
All right. So if someone's bullish in this scenario, looking at your Sigma channels,
Yes.
Probably a very conservative trade would be like to buy the vertical. Okay.
By the way, I would say this, Mark, too. Just observation. Futures are down 1% already. Okay, and we're going to look at Amazon here quickly too. Between the Amazon and Apple, that's a huge portion of Qs or the NQs. You could look at it there
Yes.
too. Same pattern. And Amazon had a big miss. Amazon had a big miss. So both of these guys, I would let some of the air get out of this mess and try get into a position maybe, let's say for next week, last hour of tomorrow, not first hour of tomorrow. Do not get in tomorrow morning because Fai said that or Mark said that. Let some of that go away because just like FOMC or non-farm, the following day it's kind of getting settled and getting some of the unwinding of some trades they had. By the way, tomorrow's non-farm, so first Friday of the month. I would recommend waiting. Let's say start looking at it or thinking about it around noon tomorrow, and then enter toward the end of the day. Why? It's possible that this can pull down lower.
So I'm of the camp that there's been a huge run up, obviously, in the tech sector. I mean,
Right.
you can see the Dow is down 39 points today, but yet you had gigantic moves in the tech stocks, the Fangam group. So
Right.
I'm of the same camp, and you can see in the chart there in Amazon the run up, and you can look at the daily, the weekly.
The totality of the index itself. Yeah, that's a huge run up. Indices don't go this far up.
Right. So when I look at stocks like that have those kind of prices, probably the play that conservatively without putting a lot of money on the table is you look for out of the money put spreads that you could buy. A put vertical. You don't go far out in time because if you go out far in time, you're going to buy something that's not going to move relative to the movement of the stock. You want to be within 2 weeks, okay, or within a week. And if it's toppy like it looks like it's topping up here at the 3 sigma 157. So when you get up there, once it gets to that sigma, looking at something that's a lower strike vertical, and maybe that Apple you could do. I would say look at your lines. I mean, your lines kind of set it up right there. You've got the 200-day moving average is the white, I believe, and the blue is the 50.
Correct.
Okay. So, I mean, even if you've got a run up, all right. So I can't see prices to the right. I can only see. Can you open that chart up a little more to the right?
Right now, the next level is 157. The next level is 164. This is 4.
And what's the 50-day to the 200-day? What strikes it?
138. Okay, 138.76 is the 200-day, which is almost touching 0 sig, and then 200 is 147.87, which was low of today. I mean, we gapped up and opened there.
So if we reach up to these higher sigmas, even that 10-point vertical of the two moving averages probably would be a nice spread to try and put on, because obviously you're going to be at that point 47.37 at 57. You're 10 points out of the money. So realistically, that vertical spread's probably only going to have like a 15 to 20 delta on it, and it's going to be priced reasonable. And when I look at verticals, my rule of thumb is if I'm doing a 5-point vertical, I'm willing to pay basically a third to make 2/3. Okay. Yes. I'm doing a 10-point vertical. I want to pay a third to make 2/3. So if I got a 10-pointer, if I can get it for anything under the 333, where it's reasonably close to my prices and my strikes, I'm comfortable in doing it. Now here we're 10 points out of the money. Now, 10 points is not a really big move. It's a move that can happen rather easily. But at the same time, I still got to get 10 points to come to possibly be in the money. So I'm probably going to look at that spread, and I don't have any technology in front of me as to what that vertical would be. But I'd like to buy that vertical 10-pointer when it got up to 157. If I could bring in that vertical for a week out or 10 days out or something like that for a couple bucks, that's a nice downside play that doesn't have a lot of risk. And if we get a move down for some event or how these stocks move, you're going to be in the money quickly. And the part about these verticals, when you buy them cheap, okay, regardless of how high the stock's going, they hold valuation. So you've got an ability to say, okay, this isn't working. I'm going to take my loss. I don't need to lose the whole amount I put into it. I'm going to be able to get out and maybe even roll up to higher strikes, which is another repair strategy for something like that. You want to stick with the bearishness of a back off of the stock. So there's different things that can be done to accomplish what an end result is that you think is about to happen. Now, obviously, when I'm talking to students, I don't have a crystal ball. I ask them, where do you think a stock is going? What do you want to do in the name you're doing? And then I help them build out what it is that would get them to their end goal of what they want to accomplish in that stock, and show them how to do it better than the way they've been doing it, show them how they could do it with less risk, and show them how they can get more bang for their buck. And so far, there's been great results with that.
Great. Okay, guys, any other questions for Mark? All right. Thank you so much, Mark. Thanks for your time. And I'll send the link to more reading on on the landing page of Larry's website with the email later on tonight.
Appreciate it. I thank you. You're always very generous with me, and that's very special to me personally. So
Hey,
thanks for having me on. Hope that I gave some ideas to folks, and they can spend some time taking a peek at the website, see if there's anything there that catches their eye. And like I said, it's a no pressure play that I'm doing for people, and it's entirely up to folks that I'm coming across that are highly capitalized and they want to control their own destiny, and I'm having great success with them. So good luck trading, and as I've always told Flary, and he has a tendency to quote me all the time, remember, the market's open every day. You could always trade another day.
Yeah.
Thank you.
You're quite welcome. Just one last comment here, guys. The last two market upheavals, I worked with Mark very closely, especially 2008, of course, 2020. The 2009 and 2020, and I learned a lot from him. And 2020, I was more prepared because I knew his personality and how he operates. 2008, it was like Moses. I mean, when he talked about the OTC contracts that were not recorded anywhere, I remember we used to come over at Sun Deck, right in downtown LA. I mean, Chicago. And he would we'd go sit upstairs, get some fresh air, and starting like August, or not even August. Let's come back. Let's say June, July. I noticed my long calls weren't working. So my question was why? And then he was helping me out. And he said, listen, these OTC things could blow up, and they don't have a handle on it because they're not listed. They're in different drawers of different banks. We don't even know the depth. Well, the depth came out when Lehman filed September 15, I think it was. So, and you know the rest of the story. That was step one. Step two was 2020. And I remember I did a market timing webinar in early February, and I said I'm going to go short because I'm nervous about the two words: chemical reagents. Okay, CDC had told me they don't have them. So I go to Mark and I said, Mark, this is a true story. Mark, what do you think about this? He goes, Ferry, that may be a problem to start, but depth of this is, because remember, he's now running a biotech. He says, from what I read and the people I talk to, the key thing is we have no vaccines. This market is not going to calm down, get calmer down, or the economy until we have a vaccine. Okay, when the vaccine comes, the following year. It wasn't even ready until December, and then it had to go through because it wasn't volume, it had to go through a linear programming problem. Who gets it first? The doctors and nurses and EMS and those guys. So he was spot on. I can tell you, the experience is there, and twice I've witnessed it myself, where it was not in any books, it wasn't in any news, it was just watching your own money in the pit, let it grow at the rate he had, and you learn a lot. So yeah, good luck with him. I'll send you a link. All right, let's head on into our last part of the puzzle, which is market timing. First news is we got stopped out. I think yesterday, I believe, which you had to stop. Yeah, we got stopped out yesterday, so we didn't take this hit of today. Now, not with the option. Let me show the trade, and so we know that. And you can't win them all. We had a streak that we did very well, but now we got stopped out. But it was a wide stop. I didn't think we were going to be that wide. I mean if the actual will come in that wide. You can see our stop was 4,100 got hit. We never got that close to 39.45. So we didn't lose much on the theta. We just lost on the premium itself because it was erratic and fast. That tells me, hey, the short side is probably done. Now, right now the futures are down. Tomorrow's non-farm. If the number comes strong, which I think it could, but nobody knows again about tomorrow. Matter of fact, at this time right now, about 2 hours ago, actually, about 3 hours ago, two people in this world know what that is. Biden and Powell. Even the people who work on it, they work on pieces, just like CIA. It comes in pieces. So, as a matter of fact, the order comes in, the value comes in emails from each section. So nobody knows the whole picture. Why? Because they have to make sure it's not leaked. You know what the value is of that number? Yeah. To somebody like Soros or Julian Robinson. He's passed away by his firm. Yeah. So so we don't know. But given where we are, sigma level, and given what the futures are showing right now, given on Apple and disappointment from Apple and Amazon, even though we have come back somewhat, again, I'll remind you, this is the small guys. This is not the big guns. Okay, they don't trade after hours like this because liquidity. Obviously, there's some liquidity momentarily as the number comes, then they're gone. So right now, this is going to just meander, find a place, the orbit, and sit there. The key thing also about tomorrow I said that don't look for the trade immediately at the open. First of all, you're going to have pressure from non-farm. Second, an hour before. Secondly, you need to get current prices on the option side. So you need the first 2 or 3 ticks of the bid ask on the potential trade you're looking at. So don't do anything as of now. Wait until tomorrow. Now, because of the pressure down, you probably will get a different pricing, obviously, and you want to let that itself settle a little bit. So remember, it's cascades. So I would venture a guess that probably the optimal time for this would be sometimes early afternoon tomorrow. And then if you have to be in that trade, you like it, whatever, go into your order flow, order entry for options and set it up, let's say within the last hour. My attitude would be for these two names only, not for options, for the Qs or SPYs, but for these two names, Apple and Amazon. They're a big part of NDX, big activity, big move. I would actually wait and probably get something going there on Monday. Yeah. Because I don't want to pay for theta for over the weekend, especially with short data. If you're just trading the weeklies because you don't want to put that big of outlay out, well then the problem is your theta per day is too high because we have to look at the expiration, how many days to expiration, and it's logarithmic as it moves forward. going to drop faster. One day you got 5 days to go, so that's 20% a day. Gets to fourth day, that's 25% a day. Third day is 33%. You see what happens. So you got to think about the price and time in options go logarithmic, not linear. If you step out maybe a month to go, 4 weeks to go, at the beginning it starts linear, then becomes logarithmic. So you got to keep that in mind. Yeah, what was it that I put a Google trade on, and I didn't even see what Google did today. I put Google trade on, and it went up 100 points in less than an hour after the number came. Yeah, and it was a 3 sigma. Google was 3 sigma, and it went up 100 points above that. Well, that was luck. That was one of our early lotto plays. And by the way, with lotto trades, I learned a lot from Mark. Also, he had another trade called Murray, the Murray trade. You know what he was doing with the money trade? And I can say now he's not even here. He can listen to it. It's being recorded. He would have a trade that's not easily come, just like Lotto. It doesn't happen all the time. But you get paid going in on a spread. Are you with me? He was paid to go in, and then, of course, he paid to get out. Now, he would get paid a small amount, but he had no outlay. He had no outlay. Nothing like you have to have, liquidity in your account because it involves some leverage, just like futures. But he didn't have to pay for the position. He would get paid to go in, and then of course he would pay to get back out. So we call it Murray trade because he would get paid twice. Okay, and those were very interesting. I haven't seen anybody else. I've been around a lot of people. Gil Caffrey, who was also a student of Larry, Larry himself. I forget Jim. The fellow at what do you call it? Jim Bittman at the SIBO, where you teach over there. All these guns, they didn't have a Murray trade. Only Mark did. You get paid twice. Think about that. So, all right. Having said that, let's get into our regular market timing webinar. And right now it is 7 o'clock. Holy mackerel. All right. Okay. Hey guys, the bull is back. No question about it. And the issue is now how do we re-engage it? You definitely don't want to engage it at the top. That's dangerous. But I would re-engage it most likely after a pullback tomorrow. That's what I'm expecting. And usually we're about 1% down. Tomorrow morning, 1.5% right now, 1.4. Let's see. What do I show that? Here we go. I don't want to chase the next chart, but here we go. So you can see where we are. We're 1.4 there and 0.6. So there's going to be some turbulence tomorrow. Once that's get out of the way, and we need to know big boys coming in. Are they going to buy it or are they going to also sell it? That's a big decision after a big number like that. You cannot just based on after hours. I try to tell that to my friends who try to trade in after hours, saying it's you're in trouble doing that. So, but that's my decision would be. Now, hopefully, also they'll bring back some of my kind of loosen up some of my loss with Tommy Digest. I'm not out of Tommy Digest. You have got the email to that thing. It's just that we got to stop that. Quick comment also from PMT folks either trying to test it or they're paid to come in. Please, first, do not trade the first cycle you're in. Why? You gotta get used to it. Just like what we do with the ore. You gotta get at least one cycle of a signal. What is the rush? Especially if you're doing a comp with us, you're not paying for it. Don't rush. I have to make money tomorrow. Market will find out that you're needy. The way you act, and needy people always get skewed. Just don't go there. Go through the system, understand what's going on. So when the live trade goes in, you have no anticipation worries. You know how we manage it, what you should do, and so on and so forth. So paper trade the first one. Okay, that's crucial. All right, we headed back out on. Let me refresh this. Make sure our charts are refreshed. Even though I did that after the close. Usually we had an issue on the data today a little bit, and so I cleared everything about 4:30, 4:05, and then restart everything for you guys. So data should be clean. Yeah. 201, that's over 150. So that's overbought. 264, NASDAQ is even worse. So they should pull back. We still show moderate value on CI dips. You can see down here. But then again, this is before the number. This is our TH, regular trading hours. This is before the reporting. Earnings season is always like this. You can't change that. It's always bumpy in the afternoons. So, volume did admit nothing there, so I let it go. Transportation is one thing. Transportation has been very steady. We're doing about one sigma level a day, so very strong. Of course, so did Russell. As a reminder, transportation is a key for movement of all goods, but now we're so dependent on that more than anything else, including some commodities like crude oil, so that it's a good indication of economy forward. So if the economy is looking good, based on how the transportation components are doing, obviously that changes the attitude on the SPX and the NDX. To me, yesterday was a good warning where we were. So saying that, hey, this would be a problem. And of course, we opened down and they reversed it. Remember? We had a down day Monday, up day on Tuesday, big down day, opening of Wednesday into FOMC. They reversed it. Of course, there's a continuation of that today. All right. The trenders. Okay, looks like we're at 8 out of 8. Yeah. This is usually a setup for reversal, except when you're coming out of a long bear market. 1 year is pretty good. That's if you look at the SPX, you'd see what happened there. This was the high, early 22. There was a death cross. We stayed in there, and we had some massive lows. So the early part, you're going to get the detrender reverse up fast. That's part of it. As a matter of fact, we're going to a birth cross. That definition by itself will bring in more buyers from institutional side. And now here's the forward view. We're not there yet on NDX, but that's coming. That's the next phase. So what's my strategy? The loss I have here with time and digest, I'll make it up here. So by reversing here. Yeah. You just gotta do that. You can't sit there and hope. So you gotta move on, move forward. It's different than short-term trading. This is a big move. And it's not gonna turn on a dime. It will take a lot of bad news to turn it around. So momentarily we could get some, but remember, underneath all of this is the Fed, and the Fed is the big 8,000-pound gorilla. So, all right. In the chat room, I talked about SP2. We do look at it during the day a couple of times. I'm saying SP1 and Momo. SP2 is different. We'll get to that. But especially Momo, and we had a sharp drop on it the other day. We looked at it throughout the day a couple of times. The bigger brethren, which is SP1, forget the values. These values are meaningless. What we try to do is make sure we understand the sigma levels. We're at 2 sigma now. So we're also beginning to get stretched here. So there's some warning signs short term. But remember, it could continue. Coming out of a bear market area, it could take a while for this to give in. So it will fight. It will fight hard. So I would stay still long, and with the exception of what I'm doing with market for time and digest, with that exception in mind, that notwithstanding that, I would stay long. So I may wait 1 day and just to squeeze it a little bit and get a better entry. And I would reverse it. I wouldn't go flat. I would just switch up. It's just that it'll be expensive for me to switch up now. I'll let it pull back a little bit. For tomorrow only. Yeah. By the way, a couple of times during these moves, that's how we made our number. By not panicking and say, oh, I gotta fold. Or it's going up. I gotta get long. And look what happened after that. Market has a ways of doing a lot of mean reversion, so you gotta try to not let your emotions get in. And also, there's a little luck too. There's a little bit of luck there too. So, do you want to be lucky or work hard? I want to do both. So. Now, 52 weeks high and lows, 36, and the lows nothing. We always pushing up. Better way to look at it is here, the weekly chart of it. And so this could be a beginning of a run up. It's not a warning sign to me, not yet. Warning sign would be around 140 area. Usually we get to that level, we usually drop off, and so is the market. So keep that in mind. VIX, now Anita is here. Good observations yesterday when it hit down here saying, hey, we're down on VIX, we were down at negative 2 sigma, below, I believe, 18 it was, or it was at 18. I forget. Hold on, let me do this here. I got a problem with this mouse. I gotta get a new mouse. I'll get it ordered on Amazon. I keep on saying it. I keep on forgetting. Everything else comes in from Amazon. I forget what's important to me, which is the mouse. My bad. Okay, so about 18, 1787 was the low, close that low of the day. We spiked up a little bit, but this could be this could most likely is afternoon trading. Hold on, let me go here to verify that. Yeah, no, that's the 415. Well, that was enough. That was enough. And by 415, we had issues. Remember on the news because of the I believe Amazon, and then 430 was Apple. So this is what Amazon did on the VIX. Really, the realistic VIX to look at is front month as 1955. This is the Feb contract, okay? G denotes February, so it's a 1955 versus a close of 1873. So balls are up, and as it should. I think tomorrow, if the non-farm doesn't come soft, what's going to rule today is going to be VIX, yeah, because Apple allows. So that's what we keep in mind. Okay, so these are the VIXs there. All right. Hold on. What is this doing here? This has to be data one. Hold on. Let me just check something here. Just make sure I'm right. Yes, it's data one is fixed. Correct. Okay. Yeah, that's the default. Good. Sorry. SQ. And now there was a discussion on SQ today by Peter. By the way, we posted a webinar that Peter did on Friday. I wasn't around. I try to get Friday afternoons off. But to take care of my own personal stuff, because you can't trade well if you have things in the back of your mind say, I didn't do this, I didn't do that. And sometimes it involves getting hold of other people doing business hours. Just can't get it at night or on the weekend. We did a post I want to recommend you guys to take a look at it. Go to our homepage, go to where these webinars are posted by Time and Digest, and you could see how many hits he had. And they were posted last week. I'm sorry, no, not even last week, 3 days ago. Yeah, because I completely forgot to retrieve it. You could see day trading with him. And Peter is an incredible guy. I've learned a lot from him. He's been with us for 5 years, and he knows the indicators like nobody. But also he reads a lot. That's the reason. He's a ferocious reader and very good simulator of data and patterns. And he's very good with research. He knows so much. I have a question. Peter, what do you think about this? Well, where can I find that? He has it. That net open position, we have our options. It was basically created by his help. Yeah. So anyway, he started talking about SQ. That's why I'm bringing his name up today. And yes, it is beginning to uptick up. Remember, it takes an hour to get today's value, okay? Because it takes time to compute that. This is not traded. This has to be computed. It's fairly complex calculation. There's a white paper on our webpage that we show on the PMT how that's done. The white paper is by SIBO. You can Google that. Just put SKEW, SIBO SQ white paper. You should read that. Now, I will guarantee you that I haven't understood completely yet. And I will guarantee you that it will be better than any sleeping pills. So if you're having a hard time sleeping, just have a hard copy on the nightstand. After 2 or 3 nights, you'll cure your insomnia. Guaranteed. So, but bottom line, what does it say? Here's the all-time low, that's all-time high. We're the bottom half. The design was 100 to 150. That was wrong. We have traded not trading. We've observed, so it's an empirical observation that there's a shift there. So the midway is about 140, not 125. We have about 30 points up, 30 points down. We're underneath that. We're at 125. So we're like first quarter of it. Okay. First quarter time. Okay. Now, as the decisions we would like to talk about. To me, there's no signal here. But as it edges up and we get into, let's say, 155 area, then there's going to be a balance issue. But for now, the big boys are convinced there's no risk to the downside. That's basically what this is saying. We have edged up a little bit, but looking at empirical values, you could see, first of all, we're at 1 sigma against itself. That's the beauty of sigma chart. You're measuring it against itself. And 2, historically, we're nowhere close to all-time high and lows. Okay, and this is, by the way, is the all-time high. We can't cross the low. We can, but it's too far back. But you can see that's the range we're in. It's all time, yeah. So, and you could see we had a high reading there, and we did drop. So every time you get a high reading, both in terms of nominal or sigma levels, that's the time for you to think about, hey, I maybe need to unwind some things, especially if you have a longer term portfolio in front of you. Okay. Okay. So that's what SQ does. Treasuries. Okay. We edge back because the vigilantes got tired. Yeah. Especially Chairman Powell's discussion in the press conference was very supportive of the market, and that's why the market rallied. Huge. Yeah. And I had a couple of mistakes earlier in the day. I didn't trade earlier in the day. In the afternoon, I had a couple of small mistakes, and we came back with a roar. I had a really good day on the FOMC. The bear day was Tuesday. Tuesday was incredible. And then I gave back some. So it's a mixed week. But, you don't win every day and you don't lose every day. You just got to, again, go back what I said on Twitter earlier. One day doesn't make you. One day doesn't break you. It's like schooling. Schooling doesn't make you or break you. Yeah. The issue is your self-confidence. Make sure you're on the right side of self-confidence. And do your homework and be prepared. And you go from there. Now, let's look at SP2. You could see how erratic it has been. Why? Because this job here, it has to do with SP2. One of his key inputs is differential of advanced line. Differential advanced line. Okay. Of course, we massage it and we use a particular advanced line. We don't use what's out there. It's like using McDonald's later. Okay. But that's privy to us. If you look at that, again, we're in an overbought zone. We can go higher, but not much. Odds are we're going to pull back a little bit first. That's what this tells me. And every time we go up there in that range, we pull back. So, and it could be even one day. These have been one-day moves, and then we resume again. Why? What does that mean? We're bull market. They're buying the dips. Folks are showing up and buying the dips. Yeah. So be aware of that. And we also got our our rendezvous points. All 3 in this area versus all 3 down here. So chances are we're going to pull back a little bit. That's what this view, this look gives me now. Before I was talking at the open of the webinar with Admiral, that was we were talking about his stuff, and we're talking about options on the Apple and Amazon. So coming here to look at that says, okay, probably we're going to pull back, and we'll see how things go. Obviously, this is live, and this is a big spread, which is 90 days. So we're long Feb and short. We're long Feb and short April's. No, April's. This is May. I'm sorry. That's May and that's June, right? So we're long 1955, short 2150. That's why the differential is 1.95. Now, what does it mean? That's about 1 sigma against itself. This was a squeeze. We came out. The vols collapsed. The change in the vol collapsed. Okay, There's a derivative issue, so you got to think about it in your head what happened there in the intraday move, and I believe we're running 30 minutes here. So what happened here is that we opened up on a wall and it pulled up, but only to 1.8. If it gets to 0, that's the bottom. We're not there. So this could be beginning of a move down. We don't know. But short term move down. This is very short term. Okay. If it was I would have expected this to be actually much lower up here. It wasn't. Remember, lows are made here in this area of I'm sorry. The tops are made down here. Okay, it's an inverted asset. It's a wall. It's an inverted asset. So the top would be having a reading of a big spread down here. We didn't get that, which was up here. So it's got little issues there. It's got to work itself out. But for now, I think most likely is that we are going to drop because of this move. This move up. Post earning. This is the earning right there. 330. There we go. This is the earning. That's the earning. You could see where we were. So keep that in mind. All right. Up and down here by up and down volume ratios by Larry. I'm sorry I've not posted charts recently, but I've been busy. I'm sorry. But we will. We'll go back. Actually, Admiral Tico does that, but he was sick. And he has GI issues because he loves what do you call it? Ribeye and filet and chicken and all that. He likes to eat what I eat. Now today I cut him off. So he went hungry and now he's eating his dry food, which is GI adjusted, which is very premium for dry food. But we tried to do it also with his fresh pet, but he's so finicky. Anyhow, but I'll talk to Admiral to post more for you guys. This is Admiral Tico. Also a Roman. He's a Roman. Just like Espo is a Roman. I usually share this with you guys. Anyhow, we rallied up here pretty strong, okay, today. Yeah, 2, 3. Yeah, okay. We rallied up here strong, but there was no participation on up and down volume. We did not hit the threshold, okay? So, no signal. Mute. Okay. Not strong enough to say we're going to continue. Remember, we're in continuing day. We can follow 2 day. If you follow Can Slim and follow Investor Business Daily, the IBD 250, this was really made for that. These guys worked on that. So the Lowry group. So this is with not the follow 2 days not here. We don't see it. Okay. Now Russell is a different story. We're hitting it up there, but not in other indices. Sorry, let me just check, make sure there's no issue I have here. So anyhow, let's go to buy and sell. We're long here on EMD, which is mid cap. Long on Russell. Long, you can see where it went long on NQ, and of course, recently it went back and forth. Long, went short for 1 day, long again. And we're at sigma levels. Okay, that's 2 sigma. So something could happen here. Now this could continue between 0 and +2. Remember, this is -2, and stay up there. But then I would want to see this component to get over 90% line. We haven't seen it yet. So they go together. That's my interpretation because of watching it. I know Peter likes that. Actually, this is his code that I ran with his permission. And the key trick is really trade station with this stuff. All right, that's that trade manager. This is swing. Okay, so having said that, we're done there. Let me bring our last chart up. Oh, we didn't talk about, okay, we'll talk about, we didn't talk about this. All right. For this week, what's important is tomorrow, 8:30, employment situation. But before I get into that, let's look at what logical here is. Sorry, I got misguided here. what these are. Which is the SPX uh, percent of the stocks above 200 moving average. They're raging up, especially today, raging up, and especially this week, I should say. And you could see what happened with the two lines. This was a kiss, not a cross. This is a cross. This was a kiss that held up and raged up at 78. It's not necessarily cause for alarm, but we're up there. We passed 80, 85, we're done. Because by 90, 95, everybody's got to sell into that. So watch out where we are. You can run this yourself. It's on stock charts. I think Trade Station has it. I don't know what the symbol is. It only gets updated at the end of the day anyway, so I might as well use the browser. I try to keep my data limited so that it's better activity for the trading information. So 200-day there. Okay. Dollarstein SPX Alpha 200R. We've come up now. One more suggestion. I do it every time. To go to 5 years, hit update so you could see what this has done. So you get a better perspective. Now, of course, use 20 and 50. Do not use 10 and 20. Okay. So here we go. What the hell? Sorry, these are ads. Thank to whoever these guys run our show up constantly, but But look where we are. Okay, you could see where the lows were before. This is 2000 low. You could see where the highs were, and it doesn't necessarily apply to the or correspond to the high value stock. No, but you could see the divergence. As divergence develop, you get pressure on the stocks. So we're slowly pulling up, but I would look at 85 to 95 as termination area. Okay. That's 78. All right. Back to econ data. Tomorrow's a big day because they're a bond market, so be extra careful. I wouldn't jump in, just like the earnings. Don't jump in immediately. Nobody knows that quick. And there's a lot of orders above and below. They all get triggered. So you get a whipsaw, and it doesn't mean you're going to make money or lose. There's no valid empirical data shows moving in ahead gives you any edge. So I would, and from my actual personal experience, yeah, it's usually a headache. It's not worth it because you could get into a hole and spend the whole day trying to come back, and maybe you will, maybe you won't. That's what trading is. Remember, it's not a precise game. That's what it's called, a stochastic in statistics, because it's a very, very wide input variable that is volatile. So that's the definition of stochastics, actually, in statistics. So that's a major input and it changes the output quite a bit. All right, looking for tomorrow. 223 prior, 185 consensus. Look at the range. It's huge compared to prior. That's what you need to think about. What's the range of consensus? Not just the value, but the range versus last. So this is going to be interesting tomorrow. Now, we always say that about next day because we don't know it. But seriously, this could be interesting. Given where we are with the few, remember, a lot of the layoff stuff and so forth may be coming in. And so the rotation we get on people moving jobs and, and sort of net new jobs added to the economy, that's what this number is. It could be quite volatile tomorrow. The other thing you want to look at is the reinstatement of prior data. Because it's so volatile, the last 2 months gets adjusted up or down. You want to look at those. To me, those gives me more clue than what the headline number is, which would be replacing here. And you most likely get two columns here. One is reinstatement of prior, and then what the actual was. And again, now the actual could get reset next month. That's awesome. So keep track of that. I usually try to read this, or better yet, if you can get in quickly, go to BLS.gov, Bureau of Labor Statistics, and read the actual reports because you get more data. You could see, for example, healthcare. Right now it shows manufacturing. I want to see healthcare. I want to see what is my persistent hospitality. I want to see hospitality. I want to see retail. They showed that more detail there. Plus adjustments. And there's a better right up there about what they changed. What was the restatement? So you could see the time series of being adjusted properly. So you get a more realistic view of what today is because the last week got adjusted. Okay? The big adjustment is usually last month. The minor adjustment goes a month before because I've already been adjusted. Okay, that's my spiel. This is it for me. Right after this is, as always, when this is done, we post it. There's a post processing involved and on GoToMeeting here, and then we have to upload. Upload is quick. Post processing takes a while, but then we post it, and always you can find what we do on what do you call it? On our homepage. I'm sorry, our landing page for Hamzy Alex YouTube, and I'll post it there. I think if we go here, that takes you there, right? I think so. Yeah. No, oh, that's customization. No, the channel. This is the channel. Yeah, this is the channel. There's a channel there. That's where you should land there. You can you can become a member, and then there's videos. When you hit the videos, I mean, this is the whole all these years. They're ranked by that, but you do you did video. Then you can see more recent ones. We tend to change each page cover to catch your attention, so it's different than before. You can see what we okay. This one was for NQ trading. This is what happens in the chat room. But and I was away, and they recorded it, and I said, "Fine, I have no problem. We'll expose it." And then we got a bunch of in 2 days ago coming here to that. So again, you can join, and you'll be informed of these webinars within seconds once the posting is complete, the post processing. Okay. Thank you all. Any questions for me? Again, my apologies for yesterday, but I make up today. And today, market issue. I was in the middle of a trade that got slightly derailed because of the earnings, but it turned out that we could do it better at 6 for you. Went a little bit longer than normal, it's an hour and a half, but wish you well. Have a good one over the weekend, and good night to all. Okay? Greg, thank you. We'll see you later on. Closing the webinar now.